Yeah. So
That feels like so much pressure.
I know. So I
The
just
countdown,
ignore it.
you know?
'Cause if I had to start on that cue,
Yeah.
I would never hit it. I would never hit that cue. But basically, I looked at all these podcasts, but I couldn't find one that nothing really felt like what I was trying to listen to, or nothing felt like this show. Till I found some of those, and now those are the podcasts I listen to
You
all the
binge listen
time.
on to them,
They always say things, and I'm like, wow, that's so profound. And I'm betting our audience isn't listening to all those podcasts at the same time. So I'm like, you know what? I'll just deliver it here, as long as I give credit, because I don't want to be that person who comes and like, oh my god, what a profound thing.
Yeah. Well, I don't think there's anything unique.
That's true.
Right.
But I'd rather say where I got it from than to just leave it at, this is Adrian who said this. Yeah.
Amazing. Yeah.
Okay.
Tim, how's your week been? Anything interesting?
I don't know, man. It's just a week that is moving pretty quick.
Yeah.
Like some of them do. Still working hard, still strategizing. I think that's just how the week is going. Yeah, how has yours been so far? And welcome back,
Thanks. I was in
You
Diani.
don't look suntanned. You're keeping your hat on, eh?
I was already melanated enough. Yeah, just got back from Diani. Went to celebrate my birthday, actually. So, pretty good. Went out with my wife. Got some golf in, Kidogo.
Oh, yeah, I saw that, by the way.
That golf course is really unique, honestly, because they have, I don't know if you play golf.
Are you about to say your scores were bad because it was unique?
Let's not talk about the scores. But the bunkers, I think the fact that there's a lot of sand, so the bunkers are really huge to the point where there are trees in the bunkers, which that was amazing to me. Like, anyway, I'll just show you pictures.
Yeah.
And then there are monkeys everywhere, like everywhere. Baboons as well. So there's some bigger ones. And you're like, there's some smaller ones. I'm like, I could take this monkey if it came to it. But I saw the baboons. I was like, okay, I'm not gonna mess with those. Yeah. How about you? How's your week so far?
As Tim said, still strategizing, very busy. It's a very busy week for me, actually. Glad you guys were patient enough because I was almost missing this. But glad you had that buffer for me.
Yeah.
Exciting time for where I am right now, and I think I'm going to say more about it.
Awesome,
but it looks like one of those weeks that it will already be Friday.
Before you know it.
Like they're all doing anyway. Seems like I have no idea where 25 is. 2025 is in a hurry to go to.
Q1 is almost done already.
Absolutely, it's almost done, and you think that January 1st was just a few days ago. It feels like a few days ago, and then we are almost done with Q1. So, yep,
awesome.
Okay.
I mean, I'm ready to get into it unless you guys had anything else. Just to, I guess, give you a heads up. We've had some conversation on this podcast where we're like, I wish I had a finance person here so we could ask them this question.
Absolutely.
So I've gone through to just dig up a few of those.
Yeah.
And actually remind myself and make sure I ask you these questions.
Okay.
Actually, one of them that you'll remember is a question about safes.
Yes.
Okay.
We had a big,
they're more of debt or equity, or we should just call them quasi-equity.
Basically, how would you characterize those on financial statements, essentially? I guess that's a question that we
so
have
that's
no
coming
authority
somewhere.
when it comes to that. If you have any insights on that, or you would like to touch on that later, we'd love to hear on that. Another one that just occurred to me as I was listening to these podcasts that I love, there's a co-founder or CEO of some company called Aspiration in the US. The CEO just got, I guess, indicted on fraud charges or something like that. I don't know if you've heard about this, but the interesting quirk about that company is they were reporting. So we've talked about EBITDA a few times on this show, but so the podcasts I've been listening to, people keep sort of slamming EBITDA as a metric and saying, it's kind of doesn't have as much value as people think, etc. And then there was EBITDAC during COVID, where there's earnings before all these things and COVID. So these guys, Aspiration, the way they were reporting, they also had a new metric, which was EBITDAM, which is earnings before all these things and marketing. Which
and the marketing was 150% of the revenue.
Exactly. So things like that. I sort of really wanted to get your views on sort of EBITDA as a metric generally. Does it have? And also, I also learned that it's something that's pretty recent. Only came about in like the 70s or something. That's when EBITDA was invented as a thing.
It's not that old.
Yeah. So
I think if you're keeping up with finance, which really excites me.
Yeah.
Things change.
Yeah.
You get courses like financial engineering being introduced in universities. And it's very exciting to actually keep up with those, right? But I'd say finance is not really the accounting that a lot of us are taught, are taught that that's what we do. It's really about adaptability to the world around you. So if you think about, all of the innovative things that you hear brought down the world, 2008, the derivatives, etc. Things, keep coming up, right?
Absolutely.
And if you really follow them, right, then you should be really excited about finance, which most people are not. So I'm really hoping. Fair warning, I'm an accountant, but I'm really hoping that I get to give you a little bit of what that insider.
I'm already getting excited. Adaptability to the world around you. That's what finance really is. I love that.
And
thank you.
Providing solutions. Well, at least it's a good thing that you've hinted that finance is very different from accounting, which is perhaps the boring part of finance.
Well,
the more monotonous one.
Well, I'm an accountant. I'm an accountant.
Okay.
A very introverted one. I'm also a journalist in training. I've never really practiced. You'll see from this show today.
Oh, okay.
But I think at the core of it is really about storytelling. Because if you think about finance, it's a universal language, right? No matter where you go, what language you speak, it's a universal language. If you and the accountant's work is really to put what you do in totality into a language that anybody else, what you call an officious bystander, I think the lawyers might know a little bit of that, into something that somebody else is able to interpret and give you the same results, right?
Okay.
Yeah. So I'd say accounting is about storytelling.
Accounting, okay.
At its core.
Yeah.
And finance is sort of like how we respond to circumstances around us.
Awesome.
Yeah.
Thank you. I think that's a very good intro to get us started.
It is, and sounds like financial. Your bachelor's degree in finance, class 101. Feels like a professor just introducing the concept.
I'm sure we're gonna learn a lot.
Yeah.
Okay, wonderful. Thanks. Okay. Now let's get to it. Welcome to another episode of the Full Scale Podcast. Today, we are excited to host a guest who is a decorated expert in finance, Denis Nyanja. Denis is a managing partner and co-founder of DCB Consulting, trading as Scale CFO. He has experience spanning more than 14 years, providing financial advisory services, having begun his career at KPMG Kenya, and worked as a finance director and as well as CFO for other institutions, including Give Directly, Other Nebel, and Giraffe Bioenergy. About DCB Consulting, and he will tell us more about it in a few, provides financial services to businesses and startups, including undertaking business health check, advising on strategy, providing fractional CFO services, fundraising, investor readiness, and corporate finance. Denis, we are delighted to have you with us today, and welcome to our podcast and for this guest episode.
Thank you so much. Karibu sana. Yeah.
So tell us about yourself. Briefly introduce yourself to the audience. Who is Denis?
Yeah. I think beyond the formal. I'm a dad.
Nice.
3 beautiful girls.
Wow.
And still a husband.
Wonderful.
So really proud of that. Denis, what would I say? I think Denis is constantly learning, right? And if you hang around me, I'm not really in my final, place really. I'm always, very uneasy, trying to look for something exciting to be able to do. Right now, I'm actually doing it, both as DCB, soon to be traded as Scale CFO. I am spending a lot of time with one of my clients, Giraffe Bioenergy, where I am learning a lot, right? So Denis is learning constantly. Some people, I think, watching this will be very familiar. I like to act older than I am. but that just means that I can really benefit from hanging out with
older people,
with older people, right?
Okay.
But yeah, family man, constant learner, and somebody who's willing to try out new things, including being a guest in a podcast.
And we're very grateful.
Yeah.
Wonderful, wonderful.
Thank you so much. Great intro. Maybe now you could tell us more about DCB Consulting.
Yeah.
So if I were an officious bystander,
okay,
how would you explain to me what exactly DCB is doing?
I've just realized I'm between lawyers, so maybe I use that out of context.
No, I'm learning.
It's actually perfect. Perfectly placed.
Yeah, that's something I'm taking from this. I want to be referred to. In law, at least we always used to have like the reasonable person test, like what would a reasonable person do? But this sounds a lot more fancy. I like that.
Yeah. So DCB was an idea that I had back in 2018. Myself and Chris, who's my partner at DCB, we were doing our MBA class together. And my thesis at that time was how myself as an accountant, I'm going to run out of job because of AI. And that was back in 2018, Wow. There was data out there that showed about 95% of us wouldn't really be, in a job based on what we were doing back then, right? And so we were just sort of like freshly, becoming CFOs and finance directors in our organizations. And, one of the things that we wanted to do, Chris and I, is to really adapt, right? And so we wrote all of this down on paper and said, okay, we're going to start a CFO services firm. We are going to add higher value over and above what you typically expect.
Yeah.
From an accounting firm.
Yeah.
Right. And just make sure that, we have jobs 20 years from now, as opposed to being out of a job 10 years from now.
Yeah.
And then fast forward, of course, we had a lot to learn. We went back to our normal jobs. We just forgot about that. In 2023, I hit up Chris and I told him, hey, let's start this, and he's like, okay, let's go back to that document that we actually built out. And basically our entire strategy was there for
within
us. Within that particular document. So that's the basis of DCB, right? Yeah. To really be able to, it's two CFOs coming together to be able to provide high quality CFO services that is customized to our market. If you look at our market, a lot of our market, we do not have, unicorns, at least by dollar value in this part of the world, right? But we have SMEs and startups that are driving and non-profits that are driving, these economies. A lot of them do not or are not able to afford a CFO.
Absolutely. And
so that's the whole thesis around DCB. And then in our full sense, we just got started without really figuring out, should we make the name more in line with the ecosystem that we're actually targeting?
Yeah.
And so 1 year on, we will soon be rebranding to make sure that, we are fully committed to the original thesis behind DCB, which is bridging quality CFO services to startups, SMEs, and nonprofits. Yeah.
Wow.
Yeah.
Wonderful.
That's a fantastic story. I mean, to go from starting that initially and then sort of taking this break, doing other things, doing your day jobs, and then coming back to it, I think that's really cool and just shows the resolve that you guys you have and sort of the belief in this firm and what you guys are providing to the market.
Yeah,
that's really cool.
Absolutely, thank you.
And so you've mentioned, it sounds like SMEs, startups in this region and the differences in the ways that they operate perhaps and the challenges that they face compared to other enterprises, in other countries or in other regions. For startups and perhaps SMEs here, what do you see as their challenges when it comes to finance and sort of having that CFO role? Do you see a lot of them actually having a CFO? How does that usually play out?
I think, and that's where we were really coming from. One thing, of course, being heads of finance in our respective organizations, and these are organizations that are running in the millions of dollars. They actually needed somebody like us to be able to run their finance for them, right? And with time, of course, you come with a lot of experience. You come with a lot of, your market rate actually goes up as a result of that, right?
Yeah.
But if you do look realistically, in order for finance, and I think I introduced that earlier, to be able to have an impact, it has to have an impact where it's actually really needed. And what we are seeing with SMEs, especially, is that they go into some challenges. That ideally, if they had somebody who was taking care of their finances and really being a partner to the entrepreneur, and taking that, point of view where, I want to make sure that, I curate and I raise this baby of a business, they wouldn't really get into that kind of trouble that they get into. Startups also are a bit of a mix of bags, because on one hand, you don't have money when you're starting out. That's why you call it a startup.
Absolutely.
But on the other hand, you are supposed to speak in high finance lingo, right? That sort of like it's really the challenge that we're actually really trying to solve, really, right? Because if you, Adrian, go out and tell somebody, I want you to give me $500,000, $1 million, like, okay, how do I trust you with my money? You need a CFO. But if you raise $500,000, you cannot pay a CFO. You're going to run out of cash very fast, right? So I think essentially it's really about going back to that. For us, what we saw is that gap between what you actually need in terms of finance support, and what the market is actually offering you at the moment, which is a lower level of finance. The second is, sometimes you have somebody who's actually run a very good run, but the operations is not in tandem with the finance. They've not really set up the finance infrastructure. And therefore, they're losing money when they're not supposed to be losing money, right?
Absolutely.
They're losing money on compliance, on lack of controls and things like that. We see a lot of that in the bucket. Specifically for startups, I think the other thing is, a very big need for them is fundraising. Being able to translate that strategy and look at and being panel beat this idea into something that is fundable is something that they lack, that a CFO would give. And then I think maybe finally is, maybe for startups specifically, it's post-investment, right? You've gone into a relationship with 5, 6, 7 different people, and then the real work starts, right? And so we see that as a very big gap that a CFO, that SMEs and startups don't have, that a service like ours is able to provide.
Wow.
Wonderful.
Yeah.
Wonderful.
You mentioned sort of, say a startup that's raising $500,000 or something like that. And it's very hard to trust, your funding of this company if they don't have a CFO.
Yeah.
At what point would you say is the ideal time? I mean, I know there's no perfect answers in this world and every situation is different. But when is it ideal for a startup or an SME to get a CFO? And maybe within that, you can talk about a full-time CEO versus a fractional CFO, which is a word that we've heard and we see it on your CV. And we're wondering, what is a fractional CFO and how does that person operate and how can they contribute to a startup or to many startups?
Yeah, so I think the answer to your first question is day one.
Okay.
Right? you need a CFO from day one. From that idea stage, you want to run, that idea by somebody who can, tell you what the math is, right? Even if they're doing it on a pro bono basis, you need that sort of person to be able to tell you.
Absolutely.
I think I'd say really fair warning as well. Like entrepreneurship also about really running, ahead of some of this. So I'm not saying listen to that particular person, but you want that partner from day one, right?
From day one, yeah.
And then I think in terms of when you actually need a full-time versus part-time, it really depends with the organization, right? And I'd look at it in terms of what's your runway, for example, do you want to, raise to 50K to be able to prove your concept and then bring in somebody who's very expensive? The answer to that might be no, right? The other thing is utilization. How much of this person's time are you going to take, right? If you believe that you want somebody who's more full-time within your organization, maybe you want to get a full-time person. If you just need somebody who's in to be able to do quote-unquote high-value stuff, then you want to be able to have a part-time person in this role. But the spectrum is, anything just before 100%. You can go all the way to whatever number that you have. Yeah.
Okay.
Got you. Sorry, so the fractional essentially is anything other than being 100% and being there doing this job.
Anything other than 100%. And the concept of fractional, is, you think about your Airbnb, your Ubers and everything else. And this is just that, right? Like if you look at your, and I don't know, but from my own personal perspective, we have realized as, a C-suite member in my previous jobs and even in my role right now, is that sometimes, 80% of the value that you get or you deliver is actually from 20%.
Yep.
Of
80-20 rule.
Of your work,
yes,
right?
Absolutely.
And why do you want to stick around for the other 80%? Right? Unless it's really drinking tea. So if you want to like break that down into 4 80% value jobs, then it also becomes exciting for the accountant, right? To be able to act in this particular role and be fractional. But also, it also depends on the organization as well, as I said. If you, can afford and can fully utilize your CFO, then, go for it. Yeah.
Absolutely. Wow, that's an interesting perspective. And even before we progress to the next stage, there are a couple of buzzwords that you've used that perhaps someone who is not into finance may not actually understand very well.
Yeah.
And I'm going actually to ask you so that you help our audience in appreciating this conversation. The first one, we've used the term CFO throughout this conversation, but we haven't given it meaning yet.
Yeah.
So that's the first one.
Okay.
The second one, of course, you've alluded to the concept of fractional. But I would like you to define or describe what fractional means in this case. In your previous conversation, you've actually alluded to, but it would be good if you can describe what fractional CFO or fractional actually means. The third one was actually SME, but a lot of people know. But still, please give meaning to those words.
Absolutely. I think CFO, depending on who you ask, it can be chief financial or chief finance officer. I've never I don't have an answer to that. I don't know if it's finance or financial. People use it differently. So that is the person who sits in the C-suite, next to the CEO, next to the other chief people, whether it's HR, etc., to be able to like bring, help the CEO execute on their mandate and help strategize, right?
Absolutely.
So that's a CFO. And as I said as well, I've really evolved over time into sort of like a finance manager role. Then I went to a senior finance role, and then I became a finance director. And one of the things, especially one of my previous bosses, who was actually brought in to actually make me CFO, spent about 2 years telling me how my FD role was actually different from a CFO, right? So a CFO, I think in my mind, is somebody who takes a lot of, I'll use a legal term, legal responsibility, fiduciary responsibility, right? Is somebody who stakeholders extend beyond the company, right? And so if I am, I'm CFO in a business, or I'm a fractional CFO in a business, my responsibility is to the owner, or the entrepreneur, but also to the investors in the business, right? And so CFO, as opposed to any other finance role, has strategy in there, has stakeholder engagement in there, has thinking about 5 years from now, in there, and that's sort of like has transformation in there, digital transformation and all of that in there. So that's who a CFO is. Now, fractional comes from fraction. Right. I'm using a word to describe itself, but it means you are spending less than 100% of your time on a role, right? So a fractional CFO, in the sense, then, does not spend all of his time in one organization.
He's not in-house, so He comes in when he is needed, sorts issues as that when they're required.
The role can actually, you can even have an arrangement where you're saying, okay, 60-80% of your time is with us, right? And the person, just plans around that. But fractional in the sense that, they will not spend 100% of the time.
Okay.
Of course, they're going to give you more than 100% of their effort in there. So that's not something to worry about. But a fractional CFO is somebody who's giving, services to, same CFO services to a number of organizations.
Okay. Yeah. Wonderful. I'm actually glad that I asked that question about CFO because I have understood the word in a way that I didn't know before. I'm surprised that you say that a finance director is different from a CFO. It never occurred to me. I thought they were the same thing. So it's good to know that a CFO is more of takes more responsibility in terms of being a partner to the business's success, wholesome success. Not just getting the financial statements done in time. Basically, their role is to be a partner. From what I've understood, and I'm summarizing my understanding, is that they're supposed to be a partner of the business in terms of success, succeeding now and building sustainability into the future. Their role is not just to tick boxes.
They don't check boxes.
Wow. Now I've learned something new. Okay. Now let's talk about financial planning and fundraising. And I'm sure fundraising is an exciting topic, especially for founders and very many people run startups. And I wanted to ask you, first of all, how important is financial planning and fundraising for a startup? Especially in the sense that how poorly can you do when you don't have good financial planning and fundraising skills? And depending on how poorly you can do, that of course will define how important would that role be. Maybe you can speak into that.
So I think I'd say, when I think about financial planning, and I'll make it a little bit personal. At a personal level, you know that there are some things that you're supposed to do, like have a budget, know how much money is coming in, how much money is going out, right? So financial planning is really about knowing your situation, right? Where am I as an organization right now? And then what do I do about that, right? And I think the reality is that all of us are capable of financial planning, even at a personal level. But all of us do not particularly enjoy it or are good at it, right? But everybody needs to have one. Now, how important is it? I think just looking at the context of a startup, for example, somebody has given you money, right? And this money is actually not even your revenue. Somebody has given you, cash outside your revenue to be able to do something very specific, right? Or somebody wants to give you money, right? So financial planning is important in the sense that as an entrepreneur, you want to have that snapshot of where you are, even more frequently than other people, right? So that you're able to react to it, right? And I think, having been part of a startup for the last couple of months or years, I have actually seen that, startups have very unique challenges, right? Especially something we call, because your mandate is actually to burn cash, and you're going to define what burning cash is, right? So you have to have that particular snapshot of like, okay, where are we? What are the promises that you actually made to our investors? Are we there, right? And then what do we do about it? Because you do know that when you're raising money, you are promising heaven, right?
Absolutely.
And then what do you actually do about it? So financial planning is important, especially for a startup, in the sense that it gives you the ability to be able to react to where you are at that particular point in time, right? Fundraising, of course, most startups, especially if you have an ambitious idea, you'll always start from, really believing in your idea, but being very far from profitability, right? And sometimes the dilemma of an entrepreneur is they have this very good idea about, I'm going to go in and then I'm going to change this and then I'm going to do that, I'm going to do that. And then you realize 90% of your job is fundraising, right? So in a sense, that becomes a very important component. You're probably a farmer or you're a lawyer or you've done this particular, and then you're expected to actually go out and fundraise. And it becomes a very important part of now why you need to be able to get a CFO on board to really take a lot of that lift away from you.
Because you're actually raising money.
You're raising money.
You may be good at your product, but this is now a question of money and how you're going to utilize it.
Yeah, and if I was to do sort of like value allocation, would I rather you as an entrepreneur spend time doing what you said you're going to do, or raising money, right? We'd rather really buy off some of that time, and have you focused on what you actually
building the product,
building the business,
building the business,
Okay. And just briefly, what do you think are the common financial mistakes that startups make when raising capital?
Well, I think first of all, I think we need to appreciate that most people who start up an organization are doing it for the first time, right? Right.
Very common, actually.
And it's really about really failing fast, right? As the tech bros like to put it, right?
Yeah.
And so you're going to make some mishaps here and there, right? What I've actually seen is something around timing, right? Timing is actually very important. When do you actually raise? When do you go into the market, right? And of course, if you have a board of advisors around you, a very good, competent board of directors, then a lot of them will tell you, especially if they are your early supporters, tell you, okay, this is the right time. This is not a right time to actually do it, right? The second one I'd say is really sizing the amount of money that you actually want to raise, right? And there are actually two aspects of it. Number one is you don't want to run out of cash, right? Before your idea comes to fruition. And then the second component of it is you also don't want to dilute yourself
too much.
Yeah. Right? So it's really a constant balance that you actually do, right? It's not a perfect thing, but I've actually seen those are the two main, timing and sizing. With those two components would be the two main challenges that I see with fundraising.
Wow.
Awesome.
Yeah.
And you mentioned having a snapshot of where your business is at any given time.
Yeah.
Be that the finances or even beyond that, just so you know more about your business at any given time as you're going out and having these conversations. If you could give us any few examples, maybe best practices or tips or even tools. We talk about tools on here quite a lot because any little practical thing that someone could actually use in their day-to-day as they go about their business. Ways to do that, to try and make sure you're on top of and you're capturing that snapshot of your business, whether it's financial planning or budgeting or forecasting. Are there any things you would sort of communicate to our viewers that you think would be helpful for them, just day-to-day things they could do to improve on that?
Yeah, I think it's I'd say I've gone through so many tools, and I think fundamentally they all work the same, customized to different individuals. What I've seen is you want that tool that will give you, what you actually need to be able to see at a snapshot, right? But even beyond that, I think financial planning is really a behavior, right? In the sense that you want to get into the habit of having that snapshot, right? I don't know, maybe at a personal level for some of our audience, going back and doing a budget is something that you don't actually do, right? You do it when things are very bad or very good, you know?
It's like, I have all this money now.
I have a lot of money now, less budget.
Or I feel broke,
or I'm close to getting broke.
So let me do a budget, right? Yeah. So I think, particularly, I think that behavior change of being comfortable with doing it on a regular basis. If you're able to hack that with regularity, right? Then you'll have achieved almost, the entirety of what the best practice for financial planning is.
Gotcha. So it's almost more important really to build that muscle, that habit of being on top of your finances.
Exactly.
Even individually, but especially as the business.
Yeah.
In order to then whichever tools you use, it doesn't really matter. I mean, you'll figure them out as you get them customized to you.
And I think a lot of we can go and say, do a P&L, do a balance sheet, a profit or loss or a balance sheet. Don't really make sense a lot. I think for startups, for SMEs, cash flow is king, right? Watch that cash number. More than anything, the rest we will reconcile as accountants, and then tell you where you are.
You mentioned burning, burning through cash and sort of a burn rate. How can startups maybe manage that a bit better? Because a lot of times you hear, we have all this cash, but we're burning through it so quickly. We don't have enough for next month, or we need more funding. Are there things or common themes that you've seen in the ways that perhaps people could manage their burn rate faster within a startup?
Manage it better.
Yes,
right?
manage it better.
And maybe also you could start by describing what burn rate is. And then proceed to answer the question.
So I think I came across this very funny term of burning cash when I worked for a non-profit, right? And it's typically how fast you spend your cash, right? And it's not really an encouragement for you to spend it fast, but it's really a velocity, right? How fast you are running out of cash, right? And it's really mostly used in startups because when you have cash right now and you don't have revenue, or you don't have enough revenue, then that amount is,
it's burning.
It's burning. It is. So that is essentially burn rate, and it's as I said, cash is king. And so, as an entrepreneur, as the CFO supporting an entrepreneur, you want to constantly look at that number and see, okay, first of all, when are we running out? And then what are we going to do about it? Right. And so it really takes me to the second part of your question, which is, what do you do to manage it? As I said, behavior change, look at it frequently, and then make decisions around it. I think as an entrepreneur, you need to constantly pivot, right? There are two ways of actually doing it. Number one, a couple of ways, of course. And that's why you want a board of advisors around you. You can, make some changes internally, right? But I also say, make some big bets, And it really depends. It's really a spectrum around the entrepreneur and the business and everybody around it, right? But I'd say financial planning, which is like constantly looking at this and constantly looking at the cash and then making decisions around what happens as a result of your burn rate is really the work of the CFO. You don't want to wake up one day and somebody tells you, oh, by the way, Adrian, tomorrow you're running out of cash, right? You want that advance notice so that, you can choose, do I want to fundraise again? Do I want to cut off my, unnecessary expenses? Do I want to make that one big bet as I communicate to my stakeholders that, what, I'm running out of cash? So I'd say that, those would be part of the strategies.
Wow.
I look at,
Very good advertisement for why you need a CFO.
True.
Yeah. Oh, absolutely. Very interesting conversation there about watching how fast money is running out. So as an entrepreneur, you don't want to be an ostrich and hide your head in the sand, eh? Only for you to realize that you've run out of money and you don't know what to do next.
And you don't know what to do next,
Okay. But isn't it funny how much... Because the funny thing is, when you speak a lot to entrepreneurs and founders, what they're usually excited about is the idea and the problem they're going to be solving and how this can be big. This is going to be big. But in that conversation, you realize that a lot of times the central place of what finances mean in terms of helping you realize that grand vision sometimes doesn't get a very central role. And from this conversation, I'm realizing that perhaps it should have a more central role because it's like the backbone of how you're going to be actually able to reach the other side. It's like wanting to cross a raging river, but you're not thinking about the bridge. You're just thinking about that's the other side looks good. We will get there, bro. We are crossing to that other side. But then you don't realize that you probably would need a raft, a boat, or even a bridge to get to the other side. And I think that bridge is the finances and how well you're able to utilize that.
And maybe just adding to that, some if you were to go back to some of the success stories coming out of 2000s with companies like Amazon, it's really about when they made that decision to be able to go out and get some financing, right? If they waited a few months, we'd have no Amazon. They would have been wiped out by the, what do you call that, the .com bubble, So it's a really sensitive thing. As I said, of course, most CFOs are accountants as well. We don't mind playing a back role, right? But that finance partnership is a fundamental thing for an entrepreneur to have. Yeah.
Wow. Awesome. Impressive. So now let's talk about compliance and financial risk management. Yeah. So usually, first of all, what are the key financial regulations that a startup should be aware of?
So when I think about a startup, there are sort of like 2 different levels of compliance, or maybe 3 different levels of compliance I can actually think about. I think in terms of regulations, any business you start, you're going to have people, right? Yeah. And going into any space, you have to figure out, okay, how do I make sure that I am good with payroll, taxes, etc. Those are very simple to have. Yep. Go on the internet, go to any website from any accounting firm. You're going to see those. You're supposed to do X by Y and Z time, right? And then I think there's sort of like a second level, really, where you kind of look at your main business, your business model. Yeah. And then you say, okay, I'm supposed to be able to sell this. Then I want to be able to do Y with it, right? Yeah. How do I actually treat that? So say, for example, you are, you're a fintech, for example, and your product is technology, right? You need to figure out, okay, what sort of tax applies in this particular case? Is it DST, digital services tax? Yeah. Is it an imported service, etc.? So you want somebody to be able to explain that to you. And then I think probably the third one, where I sort of like now the CFO and everybody around you is going to really help you out with, including the second one as well, is looking at your projections in your model and looking at the entirety of your business and saying, okay, this is actually how we map out your tax, right? And the regulations around that become sort of like very, very important, right? Am I going to be importing products? How do I structure my business? If I do this, is it tax efficient or not, right? You can have a CFO or a tax advisor actually help you out with that.
Absolutely.
Now, when I think broadly more about financial risk management, and now you start thinking about, okay, what are some of the things that can actually go bad beyond finance, right? Yeah. And so you might have situations where you have regulators that you have to be accountable for depending on your business, right? So if you, I need to look at the state, but if you're a fintech, you want to be very clearly a fintech and not a bank,
Absolutely.
Because if you become a bank, then you have another regulator to actually deal with, right? So that's
well,
how
it's still central bank, but still you now you've added obligations.
You've added extra obligations
and risks that you're taking on.
Exactly.
Compliance risks. Interesting. And maybe now we can speak on about the future of startup finance in Africa. When you look at it from your experience, more than 14 years in finance. And now working a lot with startups, founders, entrepreneurs, SMEs. When you look at it in the future, first of all, where do you see it going? Of course, it's the concept of fractional CFO. It doesn't seem like it was a concept that was around for long, a couple of years, maybe not more than a decade ago. But in terms of trends, where do you see that going? And what things about finance for startup ecosystem in Africa excite you?
Yes, I think there's sort of like 2 parts of that question, and I want to clarify. Absolutely. So number one, are you talking about finances in terms of the money coming into the ecosystem, or are you talking about the support?
The support.
I see.
Finances, the support. Yeah.
I see. Okay. I think the trend really when you look at markets like the US, South Africa, for example, they've actually embraced fractional work, right? And you have not only fractional CFO, but the entire fractional suite, right? You can have a fractional CMO, CTO,
Chief Legal Officer as well,
CLO, depending on your need. But we are more traditional in a sense in our market, but I think I'm seeing that people are actually appreciating it more. I think since I started talking about it sometime last year, I bump into friends of mine and acquaintances who are actually moving from their full-time job into fractional work, mostly because they actually see the gap that we're actually seeing. So now it's really about really educating the market towards that. Of course, I'll go back to my thesis in 2018, as you want to be tech savvy, you want to be ahead of AI, you want to, because the market is going to appreciate all of that, right? And if I'm an external entrepreneur coming into this country and I'm actually used to a certain kind of service, I want to be able to see it here. So there's sort of like a pull factor towards more efficiency, towards more fractional work that the market is starting to appreciate, that I see in the next, a couple of years is going to be main stage and dominant compared to full-time work.
Interesting. So there's a thing about efficiency and staying ahead of the curve. But when you've mentioned AI, your thesis initially started with the risk that AI could wipe out your work.
Yeah.
Now, how do you see the marriage between AI and what you're doing now? Do you think that it will enhance what a fractional CFO does?
Yeah, I think absolutely. I think there is the concept around bin keeping, which is the traditional bookkeeping work. That's going to be wiped out. That's easy. If it's not already being done, right, that's going to be wiped out. And I think I could see the transition of finance over time. In my days in KPMG, we would go to the finance department that were entire floors, right? And yet, when I was finance director at Give Directly, we operated 14 countries from a shared desk, right?
Yeah.
And so you could see that shrinking. And so for the people who actually are able to respond, you respond by augmenting yourself to what is actually coming to wipe you out, which is technology, right? By providing higher value work, and really be able to expand yourself to be able to provide that service. So I'd say upskill if you can, right? Learn about programming, learn about how to use ChatGPT. Don't spend a lot of your time, building things that can easily be done as a result of you being just more efficient in Excel. And with time, people are going to appreciate you, right? As long as you really stick to that, I'd want to be able to provide higher value work and really keep learning. Then nothing to be really worried about.
Wow.
Yeah, you should be like lawyers, lawyers. Yeah. I don't know how you survive. You need to tell me so that I can tell my fellow accountants.
We're also trying to understand how lawyers survive.
We always figure it out somehow. But I love that because it ties so well into the whole beginning of your story and sort of adapting and wanting to create this firm that sort of has already adapted, or it's looking forward into the future and trying not to be wiped out by what's coming and always staying ahead. I think that's really fascinating. And I guess on that same theme, looking ahead now, let's say 40, 50, 60 years into the future, we're putting together a time capsule of advice, words of wisdom for the next generation of founders on the continent. So if we were to transport you into the future and put you in front of this room of, this next generation of founders who are building amazing things for the future, what's the one thing you would say to them?
I think I'd go back to something called convergence. I think with time, what happens is that for people who are actually coming after the game, they tend to do things faster than the people before them. Like my kids are very good on my phone. They're just smarter, right? And so what I'm seeing is a lot of like the groundbreaking work, the ecosystem building happening at this particular time. That's going to be ready, by the time the next generation comes into play, right? And we're going to have the population, right? In Africa. we are going to therefore have the market for Africa, right? And so I think I'd say that going into the future, it will really be the time to win, because the entrepreneurs of today have already done the hard work of figuring out how to go across borders, of figuring out how to use technology, of figuring out how to innovate around our context, right? And so they just ride the wave.
Ride the wave.
And
it's your time to win.
It's their time to win.
Nice.
Hopefully, I'll be around to kind of see that.
50 years is just a little time, so you probably will be around and remember this conversation.
And
look back.
These episodes will be in the archives.
Will be in the archives.
What people used to talk about.
It will be like a floppy disk,
Okay. So something we've been asking our guests. I think this perhaps will be the last guest we'll ask, because it would now become too obvious.
Okay.
And people will over-prepare.
Okay.
But the question is, if you had a superpower, what would that superpower be, and why would you want to have that superpower?
If I could split myself, have like 3 Denises moving around, right? I think that would be so cool, because number one will really, like, I'm lazy,
one will be at the beach,
One will be at the beach constantly and on Netflix, and because sometimes you're like, oh my God, I have to hustle, So one will be doing that. Another one will be constantly learning. Another one will be, getting things done.
Executing.
Executing, really. That would be a super cool superpower.
Yeah.
A minor one is if I could get a perfect golf swing. Right?
Don't we all want one?
Oh my God!
That's everyone here.
You know
what I wouldn't give.
Oh my God! That
any lie, any condition, any club.
When you do that thing where your body turns and the club almost goes back. Oh my God, that would be amazing. Because I would be happy. I think half of my frustration and happiness is
there has never been a superpower that was more relatable.
That's a great one. And you could also make a lot of money with that.
Of course, you'll be winning everything.
Thursday, Friday, Saturday, Sunday, $1 million.
Absolutely.
I'm assuming the swing also includes putting. So no matter where you go,
trust me, if
it's perfect.
If your swing in all other places was perfect, it doesn't matter how you putt, because you'll end up just a few inches from the hole. You need to be blind.
You haven't seen me 5 putt before, I guess.
Anyway. Okay. Wow, interesting.
But I guess in closing, we just want to ask you, is there anything interesting you've come across in the past week? Anything interesting you've learned or seen? Just something we'd like to do on the show, just to share something that you might have learned.
I think... So the interesting thing for me is something on my way to work today. I was listening to a podcast about really timing that inflection point as a company, and one thing I actually realized listening to and listening to a lot of people is sometimes you might. So the presenter was actually giving a very good example of how Blockbuster, which we like to paint in negative light because of Netflix, did a really good thing, at a certain point in time. So I think what I did learn is sometimes, there's that benefit of hindsight, and sometimes people judge you harshly, right? Despite, as an entrepreneur, you could be doing your best within your system. And I think for me, if I had $1 million from golf, right, I'd really invest in people who have actually done it before. Because I appreciate failure. I appreciate people who really learn from, what they did not catch and are willing to actually try it again, right? And then I think the other thing is I keep learning as a parent. These kids, they negotiate all the time.
Oh, okay.
And so I think I spent a lot of, this week, if you include Sunday, negotiating with my kids about something that they did not want to do, right? And I spent 1 hour doing so and then, coming out of that, reflected on how different we are as parents compared to our parents, because my dad would have taken 2 minutes.
He would have just given you a command. And that's it. That's the end of the conversation.
My dad would have taken 2 minutes to sort out that issue, but I also appreciated that, and these are the future 50 years from now that we're actually building. We are building a generation that is going to really make Africa great,
Yeah.
Amen.
Yeah. So constant lessons for me.
Yep.
On a very serious note and on a lighter note as a parent.
Awesome. Thank you. And we've learned a lot from having you on the show. Thank you so much.
Yep.
We've really, really enjoyed having you on and learning a lot, really, the world of finance, as well as some accounting stuff. I'm also learning now the differences, making sure I know what I'm talking about. But we've really, really enjoyed having you on the show. Perhaps if our audience wanted to reach out to you or to your consulting firm, where would they look, or where should they reach you?
Yeah, I think I'll say I started by saying I'm old school. Right? I have a media guy working on my socials and everything. For now, you can find me on LinkedIn.
Okay.
Denis Nyanja with a single N.
Okay.
The site of my business is on DCB Consulting. I'm going to rebrand that very soon. And hopefully we, because this is live. If this trends, then we can come back and update the show notes after this.
Yeah, for sure.
Yeah.
We'll change it to Scale CFO.
Yeah.
So it's conditional of if this trends.
We'll work on that end. We'll work on the views.
Yeah.
But thank you so much for having us. That's been another episode of the Full Scale Podcast. We are wherever you find your podcasts. Thank you so much for tuning in. Don't forget to like, share, comment, subscribe. And if there's any topics, any points, any questions that you want us to email Denis, please leave them in the comments. We'll make sure to get those to him, and we'll hopefully have him again on the show to give us more information on that. So thank you so much, and we'll see you guys in the next episode. That's us. Bye.
Goodbye.